There are two houses on the same street, same size, same year built, same driveway. One pays about $2,400 a year in property tax. The other pays over $7,800. And here's the part that should stop you cold. The one paying less is not cheating. There is no special deal. There is no loophole. The only difference between those two homeowners is that one of them, on the year they turned 65, walked into the county office and filed a single piece of paper. And from that day forward, no matter how much the neighborhood climbed, no matter how much the county reassessed, that tax bill was legally frozen in place for the rest of their life. One form. That is the entire difference. And if you are over 65 right now and you own the home you live in, I need you to hear this carefully because this is the single most expensive misunderstanding I see year after year. There is a form sitting on a shelf at your county assessor's office with your name on it. It goes by different names in different states. The senior tax ceiling, the over 65 assessment freeze, the senior valuation freeze. Different words, same idea. It takes the taxable value of your home and locks it permanently at whatever it is the year you file. Your home can double in value. Your neighborhood can gentrify. Your bill does not move. For most seniors watching this, that one form is worth tens of thousands of dollars over a lifetime. For some of you, 6 figures. And almost nobody is going to walk over and tell you the form exists. Before you decide this video is not for you, let me clear up the biggest myth right away. Because this is how people talk themselves out of money that is already theirs. A lot of you are hearing property tax freeze and thinking, that is for low-income seniors, not me. Wrong. In more than half the states that offer a senior freeze, there is no income test at all. Age is the only qualification. You turn 65, you file, you get it. And a lot of you on the other side are thinking, I only live on Social Security. I probably do not qualify. Also wrong. You almost certainly do. In fact, the freeze may be worth more to you than to anyone, because a fixed income cannot chase a rising tax bill forever. I am David Taylor from Senior Money Brief, and this is the channel where I walk you through, in plain English, exactly what to do about the money the system quietly assumes you will never come and claim. Today, I'm going to walk you through this one form, which office holds it, what it does to your bill, the trap most seniors walk straight into, and the exact 3 phone calls to make this week. Stay with me to the end because one piece I'm going to cover applies specifically to widows and widowers, and it is the mistake I see cost families the most money in the worst possible year. Let us start where the trouble actually begins, with a simple question. Why has no one ever told you this form exists? Here is the uncomfortable truth. Your county tax assessor's office is funded in large part by the taxes that office collects. That is not a conspiracy. That is how the math of a county budget works. Every dollar in property tax pays for the roads, the schools, the sheriff's department, and yes, the salaries inside that very building. So every exemption they hand out is a dollar their own office does not get to spend next year. Think about what that means. The office that holds the form is the same office that loses money the moment you file it. So do not sit at home waiting for a friendly letter on your 65th birthday saying, "Congratulations, here's your freeze application." That letter is not coming. The county is not going to call. Your mortgage company is not going to flag it. The realtor who sold you the house 30 years ago is long gone. Your tax preparer has nothing to do with your county property tax bill and is not going to bring it up either. There is no alarm, there is no reminder, there is no penalty for missing it. There is just money quietly leaving your account every year that never had to leave at all. Let me put a real number on it. The average property tax bill in this country is around $4,800 a year. In some counties, in Texas, Illinois, parts of New York and New Jersey, it is double that or more. Now imagine a 65-year-old who lives in their home another 20 years, which is normal now. That is close to $100,000 going out the door over retirement on a bill that, for many of you, should have been frozen the day you turned 65. I'm David Taylor from Senior Money Brief, and the reason I make these videos is simple. I have spent years going through this exact stuff with retirees at the kitchen table, and I will tell you the most painful pattern I see. It is not the person trying to game the system. Those people are rare. It is the honest, careful homeowner in their 70s and 80s who has paid their bills on time their whole life, quietly overpaying a property tax they were legally exempt from years ago because no one ever sat them down and told them which form to file. That is the most expensive kind of mistake there is because it is invisible. No late notice, no red envelope, just a bill that shows up every year and you pay it because you have always paid it. Let me show you what this freeze actually does to your bill, in real dollars, so you can see why the county has such a strong reason to keep quiet. Your property tax bill is built out of two pieces: the taxable value of your home and the tax rate. Multiply them together, and that is what shows up in your mailbox. Now here's what has been happening quietly across the country. Home values have climbed sharply, so even if the tax rate stays the same, the bill keeps climbing, because the value it is calculated on keeps climbing. That is where the freeze changes the entire game. When you file the senior freeze the year you turn 65, the county locks in that taxable value. From that point forward, no matter what the market does, the county has to calculate your bill on the frozen number, not the new one. In Texas, once a homeowner over 65 files the over 65 tax ceiling, the school district portion, often the largest chunk, is frozen at the actual dollar amount you paid that year. In Illinois, the senior assessment freeze locks in the equalized assessed value the year you qualify. In New Jersey, the senior freeze program refunds you every dollar of property tax increase above the year you first qualified. Different mechanics, same outcome. Your tax stops growing. Picture a homeowner. I will call him Raymond. Raymond turned 65 when his home was worth about $220,000. He filed the freeze that year. Today, that same home is worth around $440,000. Everyone around him is paying tax on the new number. Raymond is paying on the old $220,000 number. Same house, same street, two completely different bills. And the only reason Raymond has that gap is that one afternoon, he walked into the county office and filed a single form. Now here is where comfortable retirees make an expensive mistake. They hear senior freeze and assume it is welfare. They assume there is an embarrassing income test at the counter, so they never even ask. And every year that goes by, the gap between what they are paying and what they should be paying gets wider. The freeze is worth the most to exactly the person who assumes it does not apply. The person sitting on a paid-off home that is appreciated for years, because that person is staring down the biggest tax increases going forward. If your home doubled in value over the last decade and you never filed the freeze, you are paying tax on every dollar of that appreciation, and you will keep paying on it every year for the rest of your life. One form. But here's the catch. The freeze on its own is not enough. In almost every state, it sits on top of two other forms underneath it. And if you have not filed those two first, the county can quietly reject your freeze application and never explain why. Let me show you the full stack. The freeze is not one form. It is three forms stacked on top of each other. And this is the part almost nobody explains, which is why so many seniors think they filed the freeze and are shocked when their bill keeps climbing. The first form is the homestead exemption. Every state, with only a small handful of exceptions, offers some version of it on your primary residence. It takes a chunk of your home's assessed value off the books before the county ever calculates the tax. In Florida, that chunk is $50,000. In Texas, it is $100,000 off the school portion. In Illinois, around $6,000. Every state different, every state real money. Here is where people get caught. Most homeowners assume the homestead exemption is automatic. In most states, it is not. You have to file a one-page application, usually before a spring deadline. File it once, and in many states, it stays on your property for as long as you live there. Miss it, and you pay the full bill that year for no reason at all. That is the base of the stack. The second form sits on top of the homestead. The senior exemption, sometimes called the age 65 exemption. Most states that offer a homestead also offer an additional exemption that kicks in the year you turn 65. And this is the one the county almost never mails you. Completely separate application. You have to ask by name. In Texas, another $10,000 off the school portion. In Florida, another $50,000 on top of the basic $50,000, doubling the wipe-off. In New York, up to 50% off the assessed value for qualifying seniors. Two forms so far, both separate, both filed by hand. Only then, sitting on top of both, comes the third form, the freeze itself. But in many counties, the assessor will not process your freeze application until the homestead and the senior exemption are already on file. So people walk in, ask for the freeze, get told everything is fine, and walk back out. 6 months later, their new bill shows up, and it went up anyway. Because underneath, one of those foundational forms was never filed. 3 forms, different names, different applications, all required. Almost no one has all 3. The very first job, before anything else, is to call your county appraisal office and ask by name, Is the homestead exemption on file for my property? Is the senior exemption on file? And is the over 65 freeze on file? If the answer to any of those is no, ask which form fixes it and what the deadline is. Now, some of you are still going to talk yourself out of filing because of one specific belief the county is happy to let you keep believing, and it is time to break it. Here's the belief that costs American seniors more money on property tax than any other single misunderstanding, and I want to name it out loud. The belief goes like this. The senior freeze is a low-income program. My house is paid off, I have some savings, my Social Security is decent, so this is not for me. I hear that sentence from good, honest homeowners over and over, and every single time it is costing them money. Here's the truth. In more than half the states that offer some form of senior property tax relief, there is no income test at all. Age is the only qualification. You turn 65, you live in the home, you file the form, you get the exemption. That is the rule in Texas, in Florida, in Georgia, in Tennessee, in Alabama. It does not matter if you make $18,000 a year on Social Security or $118,000 a year off a pension. The over 65 exemption is age-based. Your income is nobody's business at the counter. Now, it is true that some states do have an income limit on the freeze itself. Illinois has one, New Jersey has one, but those limits are not poverty numbers. Those are working middle-class retiree numbers, the numbers a normal couple lives on in a paid-off house. And even in states that have an income limit on the freeze, they usually do not have one on the homestead or on the base senior exemption. So the person who assumes they earn too much is walking away from at least two of the three forms in the stack. Now let me talk to the person on the other side, the retiree living almost entirely on Social Security who assumes the county would laugh them out of the office. They think property tax breaks are for people with fancy accountants. Also wrong. The freeze is worth the most, in terms of what it protects, to the person on the tightest fixed income. Because a fixed income cannot chase a rising tax bill. The wealthy retiree tunes out. The modest retiree tunes out. Meanwhile, the small percentage who actually walk in and file sit on frozen bills for the rest of their lives. Do not decide today whether you qualify. Do not run the numbers in your head. Let the form decide. Let the county look at your age, your address, and your paperwork, and let them tell you yes or no in writing. Because the seniors who end up with a frozen tax bill are just the ones who filed the form. But even if you clear the myth and you are ready to file, there is one more piece that can wipe the whole thing out before you ever get started. And it is a deadline most seniors never see coming. Now we get to the part that quietly ruins the freeze for more seniors than any other single thing. It does not matter that you qualify. It does not matter that all three forms are sitting on that shelf with your name on them. If you miss the filing window, the county is under no obligation to hand it to you. And in some counties, once you miss it for the year, that year is gone forever. In most states, the freeze application has to be filed within a specific stretch of the year. In Texas, the general property tax deadline is April 30th. Miss it, and the exemption applies going forward, but you have already paid a full year at the wrong number. In Illinois, the senior freeze has to be renewed every single year, and the window closes in the summer. Miss the renewal, and the freeze quietly falls off your property. Your bill for the next year snaps back to the new market value like the freeze was never there. In New Jersey, a freeze that would have saved you $1,800 that year is erased forever because a piece of paper got mailed a few weeks late. Here's the piece almost no one tells you. Some states quietly require you to file within a certain window of turning 65. If you sat on it for a couple of years, thinking you would get to it eventually, you can find yourself outside the window you did not know was ticking. The county is not going to warn you. They send one notice in one envelope at the address on file. If it looks like junk mail, or if it goes to a rental address, the deadline passes and the county keeps quiet. There is also a deadline attached to the appraisal notice itself. Every year, the county mails you a notice with the new value they have placed on your home. In most states, once you get that notice, you have 30 to 60 days to protest the value or file for exemptions tied to that year. Miss those days, and every dollar of the increase gets baked into your bill. Here's what I need you to do this week. 2 calls. First, call your county appraisal office. Ask a specific question. What is the filing deadline in this county for the homestead exemption, the senior exemption, and the over 65 freeze? Write the dates down. Put them on the refrigerator. Second, ask one more question. If I already turned 65 a year or two ago and did not file, Can I still file now, and does the exemption apply going forward? In many states, the exemption goes forward from the year you file, not backward. Every year you wait is another year of overpayment you will never get back. Because the deadline trap is only the second worst version of losing the freeze. The worst version is the one that happens after you already have it, in the year you can least afford it. Let me tell you about a woman I will call Margaret. She was 74, living in the same house she and her husband bought in 1978 up near Cleveland. 3 bedrooms, a big backyard, the kind of front porch where 2 generations of grandchildren grew up. Her husband, I will call him Walter, had done everything right. He turned 65, walked into the county office, filed the homestead, the senior exemption, and the freeze. Their property tax bill sat locked in place for almost a decade. When the neighborhood values climbed, their bill did not. Then Walter passed away. Margaret was 71, and in the middle of everything else, the funeral, the paperwork, the estate, nobody, not the county, not the attorney, not the accountant, sat her down and told her one thing. The freeze on that house did not automatically transfer to her. In many states, when the senior spouse on the exemption passes away, the surviving spouse has to file a separate application, usually within about a year of the death, to carry that freeze forward. The freeze does not follow the house. It followed Walter. And unless Margaret filed the surviving spouse carryover, the county was going to quietly reset that property back to full market value the next tax cycle. Margaret did not file it. She did not know it existed. The next tax bill nearly doubled. Because the freeze fell off, and 8 years of appreciation the freeze had been holding back all snapped into her assessed value at once. This is a widow, living on her Social Security and a small survivor benefit. In the exact year she could least afford it, her property tax bill went up thousands of dollars. Because a form nobody told her about did not get filed on time. That is the surviving spouse trap. And it happens in county after county, every year, to widows and widowers who did nothing wrong. Here's the good news. In most states, the surviving spouse can keep the freeze alive if they file the right paperwork in time. Some states require you to be at least 55, some 62. Some just require you to have been married to the person on the exemption and living in the home. But in almost every state that offers a senior freeze, there is a path for the surviving spouse to hold on to it. Here is what I want every one of you watching to do, whether you are the senior on the exemption or the spouse. Find out today, while both of you are healthy and calm and not in the middle of a crisis, exactly which forms hold your freeze in place, and exactly which forms would need to be filed if one of you passes first. Write it down. Put it in the folder with the will. Tell your adult children where the folder is, because the worst possible time to learn a form existed is the month after a funeral. Now let us lock in your own freeze the right way. Here is exactly what to do in the next 7 days. 3 calls. None of them cost $1. None require a lawyer. Call number 1. Call your county appraisal office. Not the state, not the IRS, the county. The number is on your last property tax bill, or search your county plus appraisal district. When you get someone on the phone, ask 3 specific questions in this order. Is the homestead exemption on file for my property in my name? Is the senior or over 65 exemption on file? And is the over 65 tax ceiling or senior valuation freeze on file? Write down what they tell you. If any of the 3 are not on file, ask which application you need, whether you can download it, and what the deadline is for this year. That one call, done in 10 minutes, tells you exactly where you stand. Call number 2. If you are married or if you are a surviving spouse, call back with one more question. Ask what the surviving spouse carryover rules are in your county, what the deadline is after a spouse passes, and whether there is anything you need to file now while both of you are living to make that carryover clean later. Some counties will let you pre-file paperwork that protects the freeze the moment it is needed. Most people never think to ask. Call number 3. If you cannot get through or the person on the phone is not helpful, call your state's Department of Revenue or Taxation. Every state has one, and every state has a senior exemptions line. They can tell you exactly which forms exist in your state, which counties administer them, and where to file. You can also find every one of these applications on the state's website. Printable, 1 page each, no fee. If the paperwork feels like too much, you do not have to do this alone. Your local area agency on aging can point you to free help. So can your state's SHIP office. So can senior centers and county libraries. If a son, a daughter, or a grandchild is comfortable with paperwork, this is a perfect afternoon project. One kitchen table, one folder, 3 forms, and a bill that stops climbing. One last thing on the calls. Get the name of whoever picks up, write the date, write what they told you. If anything gets questioned later, that record protects you. 3 calls, a few forms, and you are done. Let me leave you with the one idea that ties everything together. Being legally entitled to a frozen property tax bill and actually having a frozen property tax bill are 2 completely different things. The law does not refund you automatically. The county does not mail you a check on your 65th birthday. Every senior on your street who is paying a locked-in bill got there the same way. They walked in. They filed the form. They asked by name. That is the entire difference. Not luck, not income. One piece of paper filed on time. Here's the part I want you to sit with, because it goes beyond the money. That frozen bill is not just a discount. It is what lets you stay. It is what keeps a widow in the house she raised her kids in. It is what lets a retired couple age in place instead of being priced out of the zip code by a tax bill they did not vote for. It is what protects the equity you have spent 30 or 40 years building. You are not gaming anything. You are claiming a legal right you already earned by living long enough and by owning a home in the community you built. So this week, make the call. Get the forms. If you are married, protect your spouse with the carryover paperwork. If you are a widow or widower reading this too late, still call, because in some states you can still file. And every year going forward is a year of protection you did not have before. And if this video helped you understand any of this for the first time, do one thing for me. Send it to one homeowner you love who is over 65, especially anyone recently widowed. That share might save them thousands of dollars next year. Quick note before we close. This is general education, not legal or tax advice for your specific situation. Property tax rules vary by state, by county, and sometimes by year. Always confirm the exact deadlines and eligibility rules with your own county appraisal office or a qualified professional before you act. I am David Taylor, and this is Senior Money Brief. If you found this useful, hit subscribe and turn on the bell because I break down one of these hidden money moves for seniors every week. Make the call this week, not next month, this week. Your bill is not going to freeze itself. I will see you in the next one.